the story is Clover again, which is soaring yet again after that incredible move yesterday. Of course, this once a Chamath-backed SPAC that merged Clover merged into it.
Yeah.
I believe he's still locked up. There's been some reporting because, his stake has, as you might imagine, risen dramatically in value. But it's a 6-month lockup from the close of the transaction, and that was in January. So there's been some reporting that he can sell. I don't believe that's correct, at least if you read the S1, but as you take a look at him. But, if the stock manages to stay above 12 for a period, I think it's 20-something days, then you can also sell a third of your stake. So They're going to be watching that, too. That's typical language in all these SPACs. But the point, of course, is that he's become, his wealth has gone up dramatically, even just in the last day with this move in Clover, which continues. That is heavily shorted. But, guys, there are other names, too. Have you taken a look at Wish? Remember this thing?
Yeah.
Wish? Remember these guys? They
that was
public
failed deal.
IPO.
Right.
Didn't do well. They sell a lot of stuff you buy at, I don't know. Where would you buy it? Dollar store, maybe?
You skeptic, you. By the way, Clover Health was downgraded to neutral after Bank of America because the numbers.
There's
context.
There's context.
Hindenburg
logic.
ContextLogic. Yeah, that had been a failed deal.
That one, Wish ContextLogic is heavily shorted, 50%. I mean, there is some method to the madness, Jim, in terms of targeting.
Well, Hindenburg did a very solid job about why you should not own it
on Clover.
Why you shouldn't own Clover?
ContextLogic.
You're not talking Merck yet.
No, we're not moving on to Molnupiravir yet. No.
Well, there's one more. Goldman takes a crack at the meme activity today. Costins, they look at various episodes, and they argue that it's small lot trading that declines prior to the share price peak. And that, in their view, implies that it's larger traders who are driving us to the peak and then again after the peak.
Wow. Well, I was hoping he'd talk about the out-of-the-money call problem, where people buy out-of-money calls. It's very hard to hit. If you're a market maker, it's very hard to hedge.
July 800s in GameStop.
Yes, the July 800s.
30,000 open interest.
So what is it, guys?
800s. By the way, they were buying them a few weeks ago. They've gone up dramatically in value.
Well, so
moving GameStop.
Well, you have to cover if you're a market maker. You have to buy because it's very hard to.
But it's. People are also selling those calls. That's one way.
Right.
You're not
picking up a little income, kind of a dividend on GameStop.
Right.
Now, these people, by the way, have total contempt, in particular for me. And I think that's because I'm actually trying to figure them out. And I like Wendy's. Why did I call Nelson Peltz? Because I happen to like Wendy's. I thought that the stock should go higher. I was not focused on the garden salad. I was focused on the same-store sales.
Right.
Now, see, that little comment I just made, they hate that.
I know.
They just hate that. And you know what I say?
Just keep it coming.
I say
yes.
Just
blocked?
Bring it on. I'm from Philly. I never threw a battery, but I did throw snowballs.
Shepard Smith here. Thanks for watching CNBC on YouTube.